from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help you get better returns in the stock market. Our regular host, Rob Farian from Flying V, is back. He's our digital marketing partner. Rob, where were you last week? And we're so glad to have you back in the host chair.
Trying to think where I was last week. I don't think I was anywhere, actually, Gary, if I remember correctly. It was just a nice little relief week for me. My wife's knocking on the door of a due date coming up here, October 1st. So any moment, any minute. So if I have to shut the laptop in the middle, cash in, you take the reins. Means something's happening. But no, all good over here, Gary. But happy to be back in the seat, bringing everybody the 5 things to know in investing. We also got Cash and Crow joining us, a DKI intern, going to kick us off actually with an educational topic. I think perfect. First thing, Monday morning, opening bell edition of the 5 things. The Fed agrees with President Trump. But Gary, do you want to start it off? We're going to go into educational thing here with Cashin.
Yeah. All right. So Cashin, let's talk about our educational topic for the week. You were the one who picked it out. It was a good one. We're going to talk about why gold and treasuries rally at the same time. Why are they correlated?
So at a high level, we know that a lot of people kind of consider both of these assets to be safe haven assets. People typically flock to them in times of economic uncertainty. So we definitely saw this kind of recently in that initial COVID shock. Gold was rising, treasury yields plummeted to an all-time low as investors were expecting rate cuts. And overall, this kind of happened at the same time. So gold is often talked about as an inflation hedge, and for a good reason. Historically, it's really good at preserving purchasing power during times of inflation, sometimes even increasing it. And, it's a real asset. So it doesn't have things like credit risk or default risk. And supply is limited. Supply doesn't just increase like the U.S. government can print money. So it's only increasing maybe 1-2% a year. On the other hand, treasuries are often considered the world's safest paper due to being backed up by the U.S. government. And while that is true, the government can always print more money and pay back those treasuries. Lower yields sometimes aren't the best investment to make. A lot of times investors will flock into these investments when yields plummet. But, when that 10, 20, 30-year treasury finally matures, and those yields might not compensate for the purchasing power that was lost during that time. So, overall, treasuries tend to protect investors in like deflationary or disinflationary environments. Gold is more of an inflation hedge. So in times of uncertainty, when it's not clear which risk is the most abundant, investors will hold on to both. So this is what makes them pretty good complementary tools in portfolios, during times of economic trouble. So that kind of explains why during those times, investors will put in a lot of capital into these tools, and it kind of creates these joint rallies between the two.
All right, Cashin, I think that's a great explanation. I'm going to add a little bit to what you're saying. First of all, I think you did a great job talking about gold as something that people can hold. The key thing on gold is it's one of the few financial assets that's nobody else's liability. If you're holding gold, you're holding gold. If you're holding treasury paper, right? If you're holding government bonds, then that's somebody's liability. Now, the government can certainly print more fiat dollars, and they will, and that's what they do. So you're going to get paid, but the key thing with gold and also with Bitcoin is it's not a liability for somebody else. So what will often happen is during times of economic and financial stress, people will have this flight to safety. And as you pointed out, the treasury bills are backed by the US government, which, funny as it is really the best place to be in times of stress if you want to hold fiat. And so they buy treasuries. When they do that, it pushes up the price of treasuries and reduces the yield, right? Now, gold as a financial asset that has no yield, all of a sudden, the spread between gold's 0% yield and a treasury lower yield becomes smaller. And that makes gold relatively more attractive. So people will buy gold in those circumstances as well.
Yeah, those are some great points. I totally agree.
All right, good.
Gary, anything else?
Yeah.
Anything else you would add to? Just I know over the last couple of years, obviously inflation has been at the forefront, right? DKI from a portfolio position standpoint, heavily invested or has been invested in gold for some time now. I mean, what's future outlook for you? Kind of what are signals that you're focused on in today's environment?
So, Rob, that's a great question. And the key thing is the hardest money is always going to win. Right now, in fact, as of the last Bitcoin halving, um, Bitcoin is harder than gold. So the supply of gold increases about 1.5% a year. Bitcoin is actually harder than that. So my largest position is in Bitcoin. I own a large gold position, which is more than doubled since we put it on. DKI subscribers have done really well on both. And I don't own treasuries. And the reason for that is because the US government is overspending by $3-4 trillion a year. That's on balance sheet. Another $3-4 trillion a year off balance sheet. So overspending by a total of $6-8 trillion a year. That's real money on a roughly $30 trillion economy. So what I think is going to happen with treasuries is you will get paid on them. The government will pay you, but I think the purchasing power of the dollars you're going to receive is going to be lower. And as a result, I think when we look at real return, treasuries over the next 10, 20, 30 years are going to have a negative return. That's why we don't own treasuries, but we own huge amounts of Bitcoin and gold, a little bit of silver as well.
Yeah, exactly. And I mean, we keep having this conversation, right? It's not about whether Bitcoin's going to be 15,000, 50,000, $1 million, $1 billion in terms of price. What is going to happen is the dollar will be worth less and you will be able to purchase less with the dollar. Gary, I think we'll put a stamp on that one. Cashin, anything else you would want to add?
No, I think that's about it. I think I really like that kind of outlook on how, gold is no one else's liability. So whenever you have treasuries, it's more than you being able to pay for the treasury. It's the US government being able to pay it back to you. So I kind of like how you put it out there that, gold is no one else's liability.
Makes you think twice about those things, right?
Yeah, exactly.
Yeah, makes you think twice about those things. Well, Cashin, hey, thanks so much for joining us. Cashin, for those of you listeners that don't know Cashin, would you mind doing a quick introduction, who you are, what you're working on to our visitors? We are live as well across the globe.
Mm-hmm. So, yeah, I'm a sophomore at the University of Tennessee. I'm from Tennessee, from Middle Tennessee area. And, yeah, majoring in finance and accounting. So a couple of things I'm just really big on are I love traveling and, being dedicated in school and kind of just exploring careers in finance. So, yeah, it's a little bit about me. But, yeah, thank you guys so much for having me.
Yeah, of course,
glad to have you. And Cashin, worth pointing out to everyone watching, Cashin does a ton of work every week on the 5 things. He's one of the big heavy lifters here. So if you like the content, round of applause for Cashin. He talks about traveling, but this guy really does it. A lot of people talk about doing things. Cashin constantly, he gets on a plane, goes places on his own, similar to what I did when I was his age and a little bit older. So, we love to see our interns traveling and experiencing the world. Great job, Cashin.
Cashin, where's your favorite spot? What's at the top of the list right now?
That I've been to?
Yeah.
I'd say either Croatia or Japan. Those are both really cool.
Nice. So, yeah. All righty. Well, thanks, Cashin. Appreciate all you do. And yeah, thanks for the support. And yeah, it's exciting to see what you're going to do moving forward. So thanks so much, Cashin.
Hey, thank you so much.
All righty. Gary, we're moving back into the regular version. So yeah, we had Cashin on. We'll have our interns come in. Sometimes they'll do an educational piece in which we put content material out, just helping people understand the markets, what certain terms mean, educational topics. So like to have him on, let him do his bit, and then we'll roll right into what is, again, the Fed agrees with President Trump issue of the 5 things to know in investing this week. Opening bell, 7 a.m. here on the West Coast. Gary's in Madrid, Spain. We're bringing you everything you need to know. We're talking Fed cut, Gemini, crypto makes an appearance, Nvidia, Intel. We're talking OpenAI and maybe someone talking about Enron in the same conversation. Stay tuned for that. And then finally, US and China and TikTok. Haven't seen that name in the headlines. They were definitely in the wavelengths earlier this year when President Trump took office, and trying to figure out what was going to go on with them in that social media world. Gary, so let's get into it. We got a lot to cover on today's issue. Thank you so much for joining wherever you may be coming from. We appreciate. Thank you for spending your valuable time with us. Okay, the Fed cut. Everyone knows that, or I'm sure most people knew that. If you didn't, go look it up. Fed cuts rates recently. I start reading up on that. Gary, I'm going to turn it over right to you. You can let the people know what they need to know. Number one, Federal Reserve as expected is our headline.
Yeah, so the Federal Reserve concluded its September meeting last Wednesday. They surprised nobody. They cut by 25 basis points, just a fancy finance way of saying 0.25%. All Fed governors but one agreed on the 25 basis point cut. That included Lisa Cook. She's the one that President Trump is trying to remove from mortgage fraud or alleged mortgage fraud. There's some really interesting back and forth on that. One thing, Rob, that I thought was really interesting was I read a newspaper article this morning saying the Fed had established its independence from President Trump because they only voted for a 25 basis point cut. And I'm thinking to myself, this is the same Federal Reserve where we almost never have anybody objecting. They all vote unanimously. In this case, the vote was 11-1, with only Stephen Moran voting for a 50 basis point cut. I mean, that you're establishing your independence by all doing the same thing. There is literally no independent thought on the Federal Reserve. It was news one meeting ago when they had two objections. So the vote was 10-2, with 10 voting for no cuts and 2 voting for a 25 basis point cut, right? That was the big kerfuffle, that all of a sudden 2 people had said, wait, we actually want the smallest cut possible, right? I mean, that's the great independence of the Fed. The fact is the Federal Reserve has never been independent. It wasn't independent at its creation, where the Secretary of the Treasury was actually the Fed chairman. And we've gone through this. I've gone through this on this show. We just put out a big macro piece last week, where in it I devote pages to talking about all of the political interactions. My favorite, it's kind of obscene, but President Lyndon Johnson literally picked up Fed Chairman Arthur Burns and slammed him into a wall, literally strong-arming him into lower rates, right? But the Fed is independent. The Fed has never been independent, and they don't act independent. So I thought that was kind of ridiculous. It was Moran who voted for the 50 basis point cut. Okay, this much above everybody else. The one thing I thought was really interesting, Rob, is the dot plot was 25 basis points more dovish than before. Just a fancy finance way of saying that before the Fed had expected to cut 50 basis points, 0.5% for the rest of the year. It turns out now they're saying, well, 75 basis points.
Yeah.
So, okay, the dot plot a little bit more dovish. And I'm going to point out here that while the Fed is focused on employment, which fine, they're entitled to do that, the CPI is about 50% above the made up 2% target. It's been above target since 2021. The labor market isn't actually out of balance yet. So, that's why, again, for the second time in the show, the DKI portfolio is positioned for higher long-term inflation. Because these guys are cutting rates into too high inflation and an employment market that's not in bad shape.
Yeah, it's a mess in general, and of course, Gary, you're describing the Fed just seems like bizarro world, which makes sense when you're talking about what seems to be these just whether it's political entity, right? This independent thinking firm, like you're saying, but then everybody's doing the exact same thing. So, like, that's where the press is claiming that Moran here is a political actor. I mean, is that the case? Can he be that political actor that the press is potentially claiming?
So really interesting. And I thought this was, Rob, it was one of Chairman Powell's best moments in his press conference. During the press conference, the press showing how independent they are found 17 different ways to ask Chairman Powell, hey, do you think the Fed has been politicized? Do you think the BLS has been politicized? Well, these institutions have always been political. They just don't like it because it's President Trump who's now calling the shots. And you know what? Like, if you want to tell me President Trump shouldn't be calling shots, hey, I agree with you, but the Fed has been political since the beginning. So here we are. My solution to all of this is just end the Fed and let the bond market set the overnight rate, and that would solve it. But where I thought Powell was particularly persuasive, you got asked the 17th question on this, and someone said, hey, you know, Moran's a political actor. Okay, fair enough. But what Chairman Powell said is that Governor Moran can't tell the other governors to obey President Trump's wishes. The only thing he can do is try to persuade them that lower rates are the best course of action. And you know what? That's a great point. In this case, Moran wanted a 50 basis point cut. The other 11 governors wanted a 25 basis point cut. Let's not act like that's such a gigantic difference of opinions. Let's not act like the entire Fed isn't heading for more inflation anyway. But the point of all this is Moran tried to convince the others to go for 50 basis points, and he failed. 11 of them said, no, we want the smaller cut. And that's all he could do. He can't go into that room and scream, President Trump wants X, and they're okay, well, the president wants it. It doesn't work. He's got to convince 11 other people to agree with him. In this case, he didn't, and that's fine. You know, I think that was the right move. I don't think they should have had the bigger cut. So this is a situation where the system worked as it should.
Gary, with Chairman Powell and obviously Trump, we know the memes and the battles that they've had. But I mean, in this case, didn't he kind of in a way accidentally endorse President Trump's criticism of him, the BLS in a roundabout way?
Yeah, and this I thought was fascinating. So during the press conference, Chairman Powell cited recent downward job revisions as one main reason the Fed decided to end the pause and lower the Fed funds rate. Okay, fair enough. And, you know, this is something we've been talking about here on the Five Things. And again, in the big macro piece that we put out on Monday, if you want to read it, go to the DKI website, click the research tab. It's not paywalled. You're welcome to read it, forward it to people. And we talked about this, how the Bureau of Labor Statistics keeps having these jumbo revisions and they're always downwards, right? And so the whole point of this is Powell is saying these jobs revisions are one reason the Fed decided to end the pause. Well, guess what? President Trump has been saying that Powell is late, should have lowered sooner, and that the Bureau of Labor Statistics hurt him politically with data that prevented the like. This is exactly what the president said. He said that the BLS, if they had given accurate data, it would have been better for him politically, and the Fed would have lowered sooner, and that Powell is late. This is why Powell admitted this in a press conference. I don't know, but this is exactly President Trump's point. Now,
well, I mean, at some point, Gary, the facts become the facts, right? And the things that we've been talking about and saying are the actual case, right? It just becomes so clear and evident.
Yeah, and the thing is, for the people watching this, I actually don't agree with President Trump. I don't think the BLS was a political actor here. I think they've been horrible. I think they have bad data, but I don't think they were trying to hurt him politically. Right. And then on top of that, I don't think Powell is late, and I don't think the Fed should have cut. So,
and Gary, wouldn't part of it be too that at the time, right, we were getting those bifurcated stats, right, on this economy, and we had these overinflated jobs reports, and you and I started looking at them, or you reading deep in the weeds, right, of, hey, all these jobs that are being baked into these reports, they're not private sector jobs. They're just government jobs. Dig holes, fill holes.
Yeah, exactly. And a big part of the recent weakness in the job market has been a reduction in the number of government jobs. These aren't productive jobs, right? This is just the government is going to be a tiny bit smaller. That's, you know, that part is perfectly fine. That's not a bad thing. And, you know, it's true that the number of jobs available has come down, but repatriations have meant that the number of people looking for jobs has come down. So the labor market has been basically in balance. And so, in my opinion, all parties in this drama, President Trump, Chairman Powell, Governor Moran, and the former head of the BLS, McIntyre, all share blame for bad policy.
Yeah, no doubt. Great coverage there, Gary. And again, you can head to deepknowledgeinvesting.com. Gary just dropped a huge macro report last Monday. Head to the research tab. You'll be able to access that free of charge. No paywall there. Gary, let's move it forward. Again, this is the Fed agrees with President Trump issue. The rest of the way, we're talking crypto. We got AI chip powerhouses. We're talking OpenAI, US and China and TikTok coming up here in the feed. Gary, let's get to thing number 2. We're talking Gemini. And, we haven't seen a lot in the IPO market recently, but Gemini had their IPO, and we're talking here Cameron, Tyler Winklevoss, crypto space, but then the space station, of course. So, Gary, thing number 2, why the Nasdaq is betting on Gemini space station. That's Gemini ticker GEMI.
Yeah, so I don't know why they called it Gemini Space Station, but that is what it's called. The ticker, as you said, is GEMI. But for clarity, it is the crypto exchange founded by Cameron and Tyler Winklevoss. They raised a little over $400 million in an IPO last week, pricing shares at $28. It valued the company at $3.5 billion. Depending on the metrics, the IPO price was well above the initial expected range of 17 to 19. That's the recent IPO market has been strong. The deal was oversubscribed. The two things that jump out at me, one is it's worth pointing out that Gemini enters the public markets with losses of $282 million in the first half of 2025. That's an increase versus $41 million a year earlier. Revenue declined slightly in exchange business versus last year. So, it's really interesting that the offering was so oversubscribed and the valuation was high, but Gemini they've not been producing profits and the revenue is down. So it'll be really interesting to see what they do. The other thing that really jumps out at me is the Nasdaq itself made a $50 million private placement investment into Gemini Space Station and also entered into a broader partnership with the exchange that's going to give Nasdaq's institutional clients access to Gemini's custody and staking services. It's going to provide use of Nasdaq's Calypso platform for managing collateral. So basically, what the Nasdaq is telling you is we don't want to get left out of the crypto space. We are no longer just equities.
Yeah. Interesting. Gary, with recent landscape, just from a regulatory standpoint, obviously, and just in general, reins, I'd say loosened, right? If you were looking at it on a spectrum, I mean, how much of the Nasdaq's interest is kind of due to those loosening reins?
I think it's a huge amount, Rob. The fact is that institutional investors and exchanges like the Nasdaq have wanted to be involved in the crypto space for a long time because the returns there have been really good. And so the reason that they didn't, or a reason that they didn't, is because without a regulatory framework, they don't know what they can and can't do. Now, I think that's kind of silly. I think just conduct your business ethically. Saying we need the government to give us rules so we know what to do. Whatever. But that's the environment that we're in now. We do have a very litigious society. So the fact that the Trump administration has been so pro crypto and so pro Bitcoin, and then on top of that, you had the approval of the Bitcoin ETFs a year and a half ago, and then also you had the Genius Act, which basically gave the institutional investors an on-ramp into investing in crypto and made a lot of these things possible. So I think we've had a huge change in the regulatory environment, and you're seeing the exchanges follow in and institutional investors follow in. I think Nasdaq making an investment directly into Gemini and having cross-platform resource sharing, I think that tells you a lot.
Gary, with that, I think it brings attention to the stable coins, right? And without getting too deep into that conversation, DKI in the past, right, talked about stable coins, a threat to overall profitability, especially for the big banks, right, with these stakes. How does this affect your view? And then, I mean, regulatory environment too. I mean, what is this what we expected? I feel like yes, with Trump, right, we were getting a more pro crypto environment, but I mean, yeah, how does this kind of shake your footing, right, as it relates to the stablecoin nature, staking, and then, you know, what is a loosening regulatory environment, which I think was expected, or did you expect that?
Well, I don't think that any of us expected a year and a half ago that the crypto space would have received as much regulatory validation as it's received. I think, I think people in the crypto space are thrilled at, seeing the Bitcoin ETFs approved, seeing the Genius Act pass, seeing stable coins getting, institutional adoption and being approved, seeing the Nasdaq take a stake into Gemini space station. Like I don't think any of us would have expected that a year and a half ago. So that I think is all positive. Regarding the stable coins, I think what's happening is just validating my point of view on it. I'm here in Madrid, and I had lunch over the weekend with somebody who's doing some really interesting work in the cybersecurity and crypto space, and he set up companies to do high frequency trading in crypto. And I was seeing what he was doing. I thought it was really interesting. And he said, don't you think that stable coins are a threat to Bitcoin? And I said, no, not at all. Stable coins are a way to trade fiat exposure. Bitcoin is a way to get out of fiat exposure. That said, I still think stable coins are going to be a thing. And I think they are a huge threat to the big banks. And think about, we all pay the banks all kinds of fees. And if you want to send a wire, you pay fees. And if you want to send money to somebody, they say, oh, yeah, we can probably do that by the end of the close tomorrow. Right.
Yeah,
Like,
maybe.
I had somebody who tried to send me money on the 31st of a month, and I didn't get it until the 3rd of the following month. Now, why is that so? It's an electronic
Yeah.
transfer. It could have been done
My
instantly.
my wife, in all her cuteness, says, "Why is it so easy and quick for them to take money out of my account
Right.
versus putting it back in?" Yeah.
Well, here, Rob, that's 100% true. But like, let's amplify it even worse. Let's say I want to send you money and I send it through Venmo. You get it essentially instantly within seconds, right? You get confirmation that Venmo money is in your account. So somebody tell me why Morgan Stanley and Citi can't. And my answer is they can. They just don't
Right.
want to.
Of course.
Right. So I mean, for us to be able to use stable coins and exchanges to send money to each other instantly, and by the way, earn interest on it. And somebody could say, well, yeah, you can earn interest on your checking account. Yeah, sure you can. But how much? And we've all
None.
seen, right, how much, we've all seen how little the banks pay. So
Zero.
I think stable coins are a huge
Zero,
threat
zero,
to the banks.
zero of a declining asset.
Yeah, exactly. Right. Get out of fiat. Right.
Yeah.
And I've said
Yeah.
this before. I only own enough dollars to pay my mortgage, to pay my bills. Other than that,
Yeah.
I'm out of
Yeah.
fiat.
Yeah. 100%. 100%. So good stuff there, Gary. All right, let's move it forward. 5 things to know in investing. We actually have 6 things to know this week. So 20% more value. Today's a good day in the markets, no matter where you're coming from. Well, actually, I don't know that I should be looking. But anyways, we're locked into the show because we can only control what we can control, which is this right here. So Gary, all right, thing number 3. I even lost track. Having too much fun. But we're talking Nvidia. They're back in the market. On the show, talking with Intel as well in this headline here. Big time partnership sent Intel shares soaring to where if you invested in Intel, I think it was 10 years ago, your shares would be, I think now worth the exact same. Anyways, Gary, thing number 3 or 4, wherever we're at, Nvidia backs Intel with a $5 billion partnership.
Yeah, so what Nvidia did here was they invested $5 billion into Intel. They became one of Intel's largest shareholders, 4% shareholder. And the two companies announced a partnership. They're going to co-develop new generations of advanced AI chips for data centers and computers. The alliance combines, yeah, it's huge, combines NVIDIA's market. NVIDIA is the market leader by an enormous amount in the AI chip field. Combining that with Intel CPU expertise. Intel is also really good at moving data from one part of the chip to another. And you saw them do that with their Core Ultra chips, which combine a CPU, an NPU, a GPU. So to have this kind of combination where they're going to be NVIDIA is going to be investing in Intel, but they'll be co-developing a new generation of AI-powered chips and CPUs. I think that's really interesting. Jensen Huang noted Intel's foundry business is not yet going to start making NVIDIA's own GPU chips. So that's going to be done in Taiwan by Taiwan Semiconductor. But, for NVIDIA, it also secures a partner to not only provide cutting edge CPUs, it also gives NVIDIA a second supplier. NVIDIA right now relies almost exclusively on Taiwan Semiconductor. And look, for good reason. Taiwan Semi is by far the best chip maker in the world. Intel, of course, wants to have their chips made by the best. But having that much reliance on one customer, particularly one customer in a place that at some point is very likely to be invaded by China, that leaves NVIDIA exposed. And so I think they're looking to reduce their exposure on just one place.
Gary, in the written version of the 5 things, and again, we email the 5 things out via email. Go to our website, give us your email address. We'll fire that over to you on a weekly basis. You'll get that if you're a premium subscriber first thing this morning. That actually hits. But Gary, I was reading through that. And you mentioned, everyone obviously with the Intel stock price, and that thing soared and boomed last week. But you noted some things that you were thinking, from an Nvidia standpoint, right? Some real hidden benefits and just synergies there for them as well. I was hoping you could highlight those.
Yeah. So you know what, Rob? I put one in the 5 things. We'll talk about it in a second. But in this morning's reading, somebody suggested a really interesting other benefit for NVIDIA, which is NVIDIA, their sales are very, very concentrated, right? Most of their sales go to basically the other Magnificent Seven companies, right? It's Facebook and Google and Apple that are buying the AI accelerators in gigantic volume. Okay, that doesn't surprise anybody. But Intel, because they're the world's biggest CPU maker, and particularly in terms of the server market, that's a situation where all of a sudden NVIDIA is going to have access to Intel's customer list. And when they put together these jointly made chips, they're not just going to be sold to NVIDIA's customers, they'll be sold to Intel's customers, and that's a much larger list. I thought that was really interesting. Now, the thing that I saw in the deal, which I didn't see mentioned in other places, is President Trump just had the United States take a 10% stake in Intel, and both parties want to see more US tech manufacturing. But think this through for a minute. So President Trump says, okay, we're going to take a 10% stake in Intel. The NVIDIA deal sent Intel's stock up 25%, making the US government $2.5 billion. That made President Trump happy, made him look really good, made him look like somebody who struck a really good deal, right? Bringing the US a few $1 billion of profits. But in addition to that, President Trump wants to make sure Intel doesn't go under. He wants to see more US chip manufacturing. Good for him. I want to see that too. We should all want to see that, right? Everybody on Team USA should want to see more high-end semiconductor manufacturing in the United States. That's good for all of us. But what does what does NVIDIA want? They want to sell the Blackwell chips that they're making to China, right? So basically, Jensen Huang now has the opportunity to quietly behind closed doors go to President Trump and say, hey, listen, we just made you a couple $1 billion in Intel. We just made you look really good. We're going to be working with Intel and their foundry business to ensure they don't go under and support your goals and your path. Hey, we'd really like to sell these Blackwell chips to China. Is there any way you could approve that? Now, for people who don't like that, and I understand why you wouldn't, and I don't think, US companies should be trading favors like this. We're now seeing corporations trading favors like politicians from different parties do. If you don't like it, it's hard to get mad at Jensen Huang for playing the game, right? Like, this is
Yeah.
how it's played. And if you want to say, hey, I don't like this, I don't want corporations trading favors to politicians, great. That's a valid point. I'm with you on that. Politicians shouldn't be trading favors with each other. Politicians shouldn't be trading favors with NGOs. Politicians shouldn't be trading favors with lobbyists or people who donate money to them, right? This is not the biggest problem we have in government potential corruption. And at this point,
Right.
from what I can tell, Nvidia hasn't done anything wrong. I'm just pointing
Yeah.
out the
Yeah.
direction of incentives here.
I mean, it's in general too. It's like just where the source comes from. It's like, regulation across what private businesses and this, that, and favors and backdoor deals, of course. But when it's starting at the top levels of government that control all of this flow of communication, resources, etc. I mean, it's like, let's really call out, Gary. I love that you're just let's call out the real problem, right? Where it's starting is it's one thing to get corporations in line. Well, yeah, let's get corporations in line. And it starts with politicians.
Yeah. And by the way, at least this one has some benefits to us, right? When corporations pay lobbyists to go to Washington and bribe a congressman or say, fine, you can't use the word bribe, donate to their reelection campaign.
Yeah, whatever they,
yeah. All right. To say we want favored policy, okay, fine, really easy. We should be upset about that, especially since we don't get anything. At least in this situation, we
Right.
get more Intel production in the United States. Now, if you want to say, okay, it's still sleazy, great. I agree with you. I'm just saying this is the least of our problems when it comes to government misalignment of actions and incentives here.
Yeah. Yeah.
Or
Great stuff.
incentives in the interests of the people.
Right. Yeah, for sure. All right. Gary, moving on. This is the Fed agrees with President Trump issue. Thanks so much for joining us. We're live on Gary. I got it firing all over the place now, so be careful. Someone's watching, I think, somewhere, or hopefully someone will be watching at some point. But if anyone's out there listening in, give us a like, comment, question you might have. Head over to deepknowledgeinvesting.com. You can submit a question to Gary in the Ask Gary feature, as well as check out all of our different content. Certain content will be paywalled. That's $100 a month. You'll get access to all of our current recommendations, updates, changes to the portfolio, etc., and access to a variety of other content material and features. Gary, moving forward, next we're talking OpenAI. When I read this, I need all the background here because I know Enrique. I've spoke to Enrique. Enrique has done amazing work. Talent Energy is a big one. He's hit a home run on among a lot of others. I'll let you take the juice of the sub headline here. But Gary, thing number 4, I've lost track. 4, Enrique Abeyta's OpenAI comparison. I love this. I'll let you get into it.
All right, so we did get permission to print this and talk about it from Enrique. Enrique is at HX Research, and that was where his writing on this first appeared. By the way, you're right. He was the person who originally presented Talent Energy to DKI subscribers. We've got that webinar up on our YouTube channel. It was from a little over a year ago. If you want to go see it, where he talks about it for a year. We invested in that company, and that stock is, I think, up more than 3x from our original purchase price. So, thanks to Enrique on that. Anyway, going to what he was writing last week on OpenAI, he was pointing out that OpenAI committed to spending $300 billion over the next 5 years on Oracle's computing infrastructure. That deal which centers around OpenAI's Project Stargate, sent Oracle stock up something like 40% in a day. That is a gigantic move for a company of that size.
40%.
Yeah, Oracle added $250 billion in market cap that day. That's the equivalent of Morgan Stanley's entire market cap. In addition to all of that, it briefly made Larry Ellison the richest man in the world. He made more than $100 billion in that one day. I will also point out, because it's important, that Larry Ellison, I believe, was the one who funded the NIL payments to Underwood, who was the top quarterback recruit in the country last year, who's now Michigan's starting quarterback. So that's
okay. Okay. I see where this is going now. So really, this is a University of Michigan football deal, is what it is.
I'm never gonna miss an opportunity to point that out. So we want to thank Larry Ellison for that. But
Larry's a great guy. I love his island.
Yeah, there you go. All right, so let's cut to Enrique's point, because I think it's really interesting. Enrique's pointing out that OpenAI is still not profitable and is projected to burn through more than $115 billion in cash by 2029. This is over the next 4 years, burning almost $25 billion per year. That number, while jaw-dropping, this is Enrique's text here, is starting to look small next to the commitments it's making now. According to multiple reports, OpenAI has committed $19 billion to Oracle just for Project Stargate. And then, of course, you have the $300 billion that committed Oracle. So here's the question. If OpenAI is not profitable, is going to be burning through $25 billion a year, and just committed to paying Oracle $300 billion over the next 5 years, where's OpenAI going to get the money from, right? OpenAI, back to Enrique's text here, is acting like a company with near limitless financial firepower, but it's unclear where that firepower is actually coming from. I think that's a really interesting point, right? That basically they're making these commitments, and Oracle stock is up to, it's in the $1 trillion club based on these commitments, but how is OpenAI going to pay for it?
Yeah, I mean, that is the question, Gary. Like, where is the money coming from? And then, we talk about a comparison, and without letting the cat out of the bag, if you were listening earlier, you already got that tidbit, right? With the written version. But what does this mean? Where is the money coming from? What is this looking like?
Well, so OpenAI depends on venture capital, partnerships, right? Raising money that way, potentially government grants to keep the lights on. But it now needs to raise hundreds of billions of dollars. That's a really big raise. And what if it finds itself unable to meet all these promises? If that happens, that pressures companies like Oracle, and Oracle's built their own projections around these contracts and funding the Michigan football team and recruiting there. I mean, it's important that Oracle is okay. Larry, we are cheering for you. But Enrique, and here's where it gets really interesting. And this is the comparison I think is brilliant by Enrique. He compared OpenAI's behavior to Enron's, and points out that Enron used big contracts and fake projections to hide that it was losing money and racking up debt. Just before Oracle collapsed in 2021, they were pushing massive sounding but misleading deals, like a 20-year video on demand partnership with Blockbuster that never took off. Right.
Gary, real quick. Yeah. Enron collapsed in 2001. Sorry. Yeah. You had that backwards a little bit just with the years, but yes. And Blockbuster. Right. Yes, correct.
Yeah. So basically 15 minutes before Enron collapsed, they announced this 20-year partnership with Blockbuster, right? They announced this global trading platform that artificially inflated volumes in the gas market. So Enrique is saying, hey, what if we're seeing the same playbook today, only this time dressed up in AI? And now take a minute and think about what happens if AI growth starts to crater. That's what's holding up the stock market right now, right? That's what's making the stock market go up. And any reversal on on these valuations for the big companies, that would be enormous and a gigantic problem.
Interesting. We'll have to have Enrique back on. Gary, would be fun just as a special segment. Keep track on that. Yeah, I mean, OpenAI is obviously incredible, and they're rolling out. I think they're ChatGPT 5.0 now. They just recently released. I just know the amount of workflows, API calls, keys, right, that we as an organization are pulling. But to your point, they're not making. I would be shell shocked if they're actually making any money off of us, right? Because I see what we pay them, and I think it's 20 something bucks a month,
Yeah.
So you've either got this problem where you have this high powered tool, which I think they do to an extent, but there's an issue with understanding how to monetize it. It might be sales related, right? Team, that infrastructure, which a lot of times, no matter how good your product might be, if you're not getting it into the right hands or into the right hands that are actually properly valuing it and paying you for it, then what good is it?
Yeah. By the way, Rob, while we're talking about this, I paid $20 a month for ChatGPT's premium product as well. I would just be happy if it stopped offering to do things that it can't do. Right. The other day I'm using it and I'm trying to figure out some travel plans, and it says, would you like me to contact this company and see if they have a reservation available? I'm like, okay, yeah, that'd be great. Please do that. And it's like, okay, but I can't do that. I'm like, what? Then why are you offering? It's like, well, if you want, I can write the email and you can figure out where to send it, or I can write a script and you can call them.
Yeah, it's conceptual, right? And then it's like, okay, yeah, let's go and do these grand illusion type things. But when it comes to the actual structural components of getting them done, it fails more often than not. Yeah.
And in fact, over the weekend, I had something where it was saying, hey, I need to get my computer repaired. Here are 3 locations. Do you want me to put them on a map so you can see where they are?
I do see it quite as a house of cards, maybe not like at the top level. Like I'll be so curious. Yeah. When I saw that comparison that Enrique made, where I see it though is really what's happening is you have all this infrastructure and valuations that are being built on these companies that all they are is wrapping ChatGPT up, right? And they're calling it this, that, and the other. And you've seen this so many times with even other software and infrastructure and some of the biggest names in the world, right? They started as a wrapper of an existing either like CRM's a big term in our space, customer relationship management. And then you really get into the weeds of this product. And it's like, this is just the same thing with a different wrapper targeting this vertical and niche. And now all of a sudden you've got an entire industry relying on what is really a crap product tied to a product that can't make any money and might fold, right? So yeah, creates a very interesting scenario, and especially with AI. And now you're seeing like, oh, create a website in 5 seconds. Well, you know how many AI tools are out there that can do that right now, right? There's like a million. Why do we need a million? And they're all getting same or similar valuations, right? It's just it's pretty funny. So, and we're sitting here looking like, they're really crap too at the end of the day, right? Like a lot of the output of this stuff, like, yeah, it gets you far enough to move from point A to point B, but that's about it. It can't go from point B to point C.
Yeah, I think that's a great point. Going back to the original on this, want to thank Enrique for the really interesting observation here. I think his point that OpenAI's behavior, that it reminds him of Enron, I think it's really interesting, and that it could create all kinds of stock market problems, not just for Oracle. I think it's really insightful. So, always good to get his point of view on that. And congratulations as well for the great Talent Energy pick. That's just been a huge winner for us.
No doubt.
And,
no doubt.
Because of his research. So
thanks. Awesome. Yeah. Enrique, great stuff. We'll have to have him back on here shortly. Gary, moving forward, wrapping up this week's show. Thanks, everybody. 7:40 a.m. on the West Coast. Gary's clocking in from Madrid, plus 7 on me.
It's a 4:45 right now.
4:45, 8, of course. Right. Or wait, no. Yeah. Where am I at? 5, 9. Okay. Yeah. I'm good.
Yeah,
I'm good.
or as they say in Madrid, it's lunchtime.
There you go. Yeah. Gary's gearing up, ready to hit the nightlife around what, 11:30, 12 tonight, Gary?
Yeah, they go out late here, really late.
Yes, it's a fun place. Fun place. Okay, wrapping up. We're talking TikTok. The United States, obviously, earlier this year, kind of lost some steam. I think tariffs became the main issue of conversation or headlines, but coming back into the fold, TikTok again, which, as everybody know, run by a Chinese corporation, ByteDance. Lots goes into that, but Gary, let's break it down. Our final thing of this week's version: TikTok deal creates control, I think is the key word for the United States. What does it mean?
Yeah, so the deal was actually reached here in Madrid just a week ago, but the U.S. and China agreed to resolve the
Wait, you told me
controversy.
you were not a big TikToker, Gary. I don't know.
Yeah, I was not part of the
US,
conversation.
TikTok, Madrid, Gary.
I just do the dances, Rob.
Okay.
Anyway,
I'm gonna have to.
moving
I
on.
gotta find that account.
Yeah. So TikTok's U.S. assets are going to be acquired by a new company consisting of American investors: Oracle, Silver Lake, Anderson Horowitz. There are also rumors. I haven't been able to confirm this, but it looks like the Murdoch family may be involved as well. These American investors, and yes, I know Murdoch is not an American, but he's owned U.S. Media assets before. That's why I'm not sure if they're being included or not, but there are people speculating that they might be. Anyway, these non-Chinese investors, I guess is a better way to say it, are going to share approximately 80% ownership. ByteDance will remain a minority shareholder of approximately 20%. The company will be headed by an American committee with a spot reserved for a U.S. government appointee. The reason I say it that way is because, look, it's appealing to say, okay, wait, we want a government appointee to ensure that the Chinese aren't in control. Okay, that makes sense. But now let's think about the fact that right now the political left is screaming that President Trump's Federal Communications Commission pressured Disney regarding Jimmy Kimmel, and they're saying, oh no, we have censorship. Except, guess what? They're all forgetting when the Biden administration was going to Facebook, every time somebody on Facebook wrote something about the COVID vaxes that they didn't like, and we're saying, why is this account still in existence? And people were getting canceled very quietly. And why in the world was the Biden White House sending emails to a private company saying deactivate the accounts of these private citizens, right? So the point here, the reason I say it that way is, yeah, well, then in other words, everybody's unhappy with the US government trying to control the media and trying to control social media, right? Nobody's happy with it, right? 15 minutes ago, the right was unhappy. Right now, the left is unhappy. So maybe we should all agree that at some point in the next 4, 8, 12 years, somebody's going to be exerting control that you listening to this will not be happy with. It's a problem. Anyway, President Trump extended the divestment deadline to December following previous extensions. As a result, right now, TikTok remains open in the US, but we do seem to have a deal. It's not complete yet, but we do seem to have a deal to transfer control. There are specific details regarding the algorithm and security measures regarding and ByteDance's role that still need to be finalized. And I am not sure how that's going to be rolled out, but I guarantee you, the Chinese are going to do everything they can to try to maintain their algorithm.
That seems like a big piece of the puzzle, but sounds like, okay, at least they're making progress here. I think that for me is like, what is the end goal here, right? So obviously, I mean, the way I play it out, you've got TikTok, you've got major mass consumption of content material by Americans, right? And obviously we've seen, the ability to control. We've seen previous administration's interest in talking to these companies, as well as the current administration as well, right? In terms of what they're doing, how they're doing it, the information that they're pushing through to the user base. What's the goal here, right? Like, what's the U.S. trying to accomplish? How does this settle the private market side, if any? What's the goal here?
Yeah, so I'm going to tell you, Rob, I actually like this deal as much as I just criticized it. And the reason I like the deal is because I've read too many stories about how China uses the platform to influence US elections, create political conflict, and also influence American young people in a way they don't with their own Chinese subjects. The Chinese have been fighting an asymmetrical war with the United States for a good quarter century, and we just refuse to acknowledge it. And basically taking control of these conversations and creating political influence and conflict and influencing our young people in a way that US politicians and parents wouldn't want them to be influenced, right? This is what the Chinese Communist Party does. I think politicians and parents are right to be concerned here. They have every right, parents in particular, have every right to be concerned about the way their kids are being influenced. And so, look, in the previous part of this segment, Rob, I criticized government control of social media and the media. And I pointed out ways that the left is unhappy that President Trump's FCC is trying to exert control and influence right now. I pointed out ways that the right was unhappy with how the Biden administration did it. Okay. But as much as I'm against our government having control over our media, I would prefer that to the Chinese Communist Party having control over our media. And so, why do I like this deal? I like it because it took a horrible situation and made it marginally less horrible. And people might say, oh, so you're in favor of this. No, I'm not in favor of this. I'm in favor of horrible things being made less horrible. And politics has to be the art of the possible. And, one of the reasons why people so often criticize the Libertarian Party is because the Libertarian Party will often give up practical solutions for impractical perfection. And they say, hey, listen, we're going to be ideologically pure, but politics is never ideologically pure. Anything that takes something that's bad and makes it marginally less bad, like, let's just be in favor of that and acknowledge that we should always be working to improve that. And now that we have control in the US of this asset, or are going to, we should all work to reduce government control of all of our media. And, like, the next step is the next step, but this one is a good step.
Yeah. Yeah. I mean, being in the space and understanding like the overall influence that these platforms have, I'm not honestly a huge particular fan of them in general. And especially when you are talking about the youth, and, the younger they are, the more impressionable you get it into their hands. And you're exactly right. A war has been waged on the mindsets of American youth through social media, and a majority of it has been controlled by enemies, right? TikTok, number one, and then throughout the rest of the platforms in terms of Facebook and Meta, Temu. You know how many investor calls I've been on in which they were asking me, right, in terms of this e-commerce market share, and you're talking about basic elements, clothing. We literally let Temu come in, utilize Meta, and put American businesses providing clothing out of business, more or less, right, is what we did. Or even if you take it to, outside of small, medium business to big box retailers, we started letting China and Temu compete with Walmart, right, and other American staples, right? I'm sure I'll get some flack for that. So, yeah, I mean, I think it's just time, like you said, we've got things more stabilized than before, but it's also taking control of digital infrastructure, messaging, where it's coming from, what the real purpose intent is. Because at the end of the day, let's face it, Temu's purpose was not to sell clothes. Bottom line.
Right. Yeah. And so it's a great point. And we're starting to see with the elimination of the small, right? Before they got tariff exemptions on anything under $800. But the original intent of that wasn't for large corporations to ship millions of small packages. It was so the tourists who went abroad didn't have to pay all kinds of duties when they brought home, a couple $100 of souvenirs.
That's right.
That and they didn't anticipate basically Amazon dot-com style businesses where, you had individual companies rather than shipping in bulk, they were shipping individual packages and
Yeah.
getting around the rules that way.
Yep. Great stuff, Gary. Thanks so much for the discourse, as always. That concludes this week's version of the 5 Things. The Fed agrees with President Trump issue. I'm sure we'll get probably 90% less viewership because of that headline. So I tried to put some censorship of ourselves. Just Trump. You can't say that. That'll make sure it goes nowhere. So, Gary, anyways,
right?
Always a blast. Thank you for bringing us all the important news. Again, head to deepknowledgeinvesting.com. Sign up for a free subscription. Would love if you could consider a premium subscription as well, so we could keep bringing you this content on a weekly basis. We'll be here, same place, same time, around the same time, early Monday, trying to get going as soon as possible. Gary, turn it over to you for the final closing thoughts.
All right. Well, as always, we want to thank DKI's interns, Cash and Crow, who was on the show today, Samak Jain, and Gideon Rodham for their great work on the 5 Things. They do a lot of the heavy lifting. Great to have them in the support role. We're going to try to have them on camera more often. I think it's good to have them explaining the work that they do. Also want to thank you, Rob. Glad to have you back as the regular host here. And the team at Flying V that's done so much to improve the video version of the 5 Things. Also want to direct people again to the giant macro update that we put out just last week. If you go to deepknowledgeinvesting.com, click the research tab. It's not paywalled, but feel free to check that out. And for those of you watching, we know your time is valuable. We appreciate you spending it with us. If you want to give us a like and subscribe, we'd appreciate it. But hey, do what you want. We're not the boss of you. We'll see you guys next week.
Thanks, everybody.